In February 2022, when Moscow marched into Ukraine, India's crude import from Russia was almost zero. Volumes rose to 46 million barrels this month as of July 23, capturing 45% of the Indian market, according to data from Paris-based commodity intelligence provider Kepler. Urals, a high-sulfur sour-grade crude traditionally supplied to Indian refineries, accounted for 27% of the country's total crude purchases in 2023, according to ship tracking data. This is the first time that a country has accounted for over 40% of India's oil imports, climbing at a record pace of just 18 months. Shipments are likely to slow down now. Russian Urals jumped $2 to $3 above the $60 per barrel price cap set by G7 countries last week. This was boosted by strengthening in international benchmark Brent and additional export cuts announced by Russia. Russia is voluntarily cutting another 500,000 barrels a day of output next month, in addition to 500,000 barrels per day already committed, leaving less oil for China and India. Most of the cuts will come out of cheaper Urals, while shipments of premium light grades will be steady. This will have global repercussions, as well as a direct impact on India's oil trades.
Over the last few weeks or probably months, I would say it has been a very roller coaster ride for the crude oil prices. So largely, in the bigger scheme of things, I think macros are at play, and if at all China starts to contribute, the automobile industry starts to contribute once again, manufacturing starts to rise once again. It is going to be a very, very positive buzz for crude oil prices. I think prices are heading northwards, maybe $82, $85 for the Brent, or probably $80, $85, $82 for the WTI could be largely on cards. But is 100 on cards at the moment? No, that is not the side that we are looking at.
Indian officials say that the discounts on Russian crude have crashed to $3 a barrel after Urals turned expensive this month, potentially hurting purchases. Surging demands for Urals have shrunk discounts from $8 to $10 a barrel on a landed basis of European benchmark Brent to around $5 to $6 a barrel. So, what is the way forward for India's crude trade from Russia? Experts believe it might be too early to worry. Given India's huge oil purchases, even a difference of a few cents to a barrel is adequate for refiners, a refining official said.
We have been buying crude, other grades of crude besides the Urals above the price cap already. Payments wise, there aren't any restrictions. Having said that, a lot of the banks have taken a more conservative stance, and not because of their business operations overseas, they have not been providing this kind of funding. Is it time to worry? I don't think so, because though the discounts have come down, but considering that millions of barrels are processed at each refinery, the discount of even $1 or could have a huge impact on the profitability of the refineries in terms of GRMs, etc.
And what might be the alternate options for India's crude trade?
We are strategically placed in the sense that we are quite close to the Middle East, and we can always increase our crude purchases from the traditional suppliers such as Iraq and Saudi Arabia, etc., UAE, etc. And however, obviously the discounts would not be there from these suppliers. India is already in talks with them for more liberal credit terms, which used to get from Iran. Last year, we signed the crude purchase agreements with Brazil and Colombia. So diversifying the basket has already been there.
At the global level, China and the US will also play a major role in determining a future for crude prices. Both nations have pumped out large portions of their strategic petroleum reserves. They will now look to rebuild their reserves to restrain the rise of crude. Meanwhile, experts believe India has enough options under its belt to not worry about the rise in the price of the Ural crude. In all probability, Russia's move is temporary and the discounts might soon be back to their older levels, they point out.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.